And it's a new month, a new quarter, and this is Business Morning. Good morning, and welcome to the show. I'm Laddie Williams.
And I'm Chimeze Obi Iwago. Good morning, and thank you for joining us. And happy new month to you, my colleague.
Happy
and will I say April Fool? No. Okay, rating agency Moodys this week posted a negative outlook on Nigeria's banking system and says it reflects expectations of rising asset risk and weakening government support capacity over the next 12 to 18 months. Let's get to hear from the co-author of this report and analyst at Moodys, Peter Mushangwe. Thank you very much, Peter, for joining us. Good morning.
Good morning.
Good morning, Chimeze. Good morning, Laddie, and good morning to your viewers.
Yeah, so despite the coronavirus pandemic, we saw Nigerian banks announcing stellar profit figures, yet your outlook for the sector is negative. What are the key issues here?
Our negative outlook reflects our expectation of a deterioration in asset quality for the banks this year. We will touch more on that if you would like. It also reflects, our expectation that the capacity of the government to support banks is deteriorating, as is reflected by the negative outlook on the government of Nigeria's sovereign rating. It also shows our view that the profitability of the Nigerian banks will be constrained this year. We do not expect the Nigerian banks to post losses, but we expect their profitability to be constrained. But more positively, the outlook also reflects our view that the Nigerian banks have good capital buffers and that liquidity will remain solid. And we expect the foreign currency shortages to ease this year.
All right, Mr. Mushangwe, your report noted that local currency funding and liquidity will remain robust and foreign currency shortages will also ease. What will drive this?
The Nigerian banks have always had very good local currency liquidity buffers. So you have banks which are holding a very good stock of liquid assets in the form of government securities, making 45%, 50% of their total assets. So the banks have always had good liquidity. But last year we did see a deterioration in terms of the foreign currency availability within the system. This was largely because of the lower oil prices. Of course, Nigerian foreign exports come largely from oil, but also we have seen a decline in remittances that flow into Nigeria. Last year, we have seen foreign investment also reducing quite dramatically last year, and all this resulted in shortages of foreign currency. This year, with the oil prices at the good levels, if they are sustained, we do expect an improvement in foreign currency availability within the Nigerian banking system. So that is the reason why we expect the foreign currency shortages to ease.
Now, you talked about the asset quality. Nigerian banks, of course, risk assets, which are 30% in foreign currency, poses a major risk of an asset liability mismatch, which could make them not only vulnerable to a squeeze in gross border liability calls, but also could make them exposed to any adjustment in the value of the naira in the FX market. What risk mitigants would you recommend in this case?
In terms of the risk mitigants, of course, we have seen the Nigerian banks are cutting back on foreign currency lending. They remain high at 44% for the banks that we rate, but we have seen banks, cutting back on that. Some have been converting them to local currency, in discussions with their borrowers. And also we've seen, banks cutting back the funding gaps to ensure that they do not have funding problems on their foreign currency loan books. But more importantly, if I may, is really the risk that comes with their exposures to foreign currency that is a driver, one of the drivers of our outlook. The Nigerian banks exposed to these foreign currency loans. Some of them are not hedged. Some of them are to borrowers who earn local currency. And in the event of a naira devaluation, some of these borrowers would struggle to meet their repayments. And as a result, that increases their risk of default. That is the key issue around the foreign currency loans for Nigerian banks.
All right, the CBN recently reported a slight increase of 0.1% in non-performing loan levels of Nigerian banks to about 6.1%, but reassured the investing public that Nigerian banks are safe and sound. What is your take on this? Are Nigerian banks safe and sound?
In terms of the NPL, as we indicated, we expect the NPL ratio to increase. I could touch on the reasons why we believe that NPLs will increase in Nigeria. Firstly, we have seen a significant amount of restructured loans at 4 to 45%. We expect these loans to decline this year. Some will become performing, but we also expect some of them to fall into NPLs. If there is a resurgence of the coronavirus or a slowdown in the economy, this will put pressure and increase the risks. So this large stock of restructured loans is a source of vulnerability for banks, and related to that is also the large concentration risks that the Nigerian banks have, be it at sectoral or at single name level. If you take the oil and gas and manufacturing, those two sectors contributed about 41% of total loans as of September. That's significant already, and it creates volatility in terms of the NPL formation. So the banks are facing quite significant risks in their balance sheet. But that said, I should also highlight that we have seen tremendous improvement in terms of the risk management processes that banks follow. We have seen, a more stringent level of supervision from the central bank, and all these are, positive developments that will aid banks to improve their asset quality. But nevertheless, going forward this year, we do expect the asset quality to deteriorate.
All right, thank you very much, Peter, for speaking to us, and do enjoy your Easter holiday. We do appreciate your time. Peter Mshangwe is a co-author of this report on the banking sector outlook, and of course, an banking sector analyst with Moodys. All right, we will talk more. We will talk more about the banking sector. Research analyst at Commodities Securities, Bolaho Ologuro, joins us next.
All right, we're now being joined by Bolaho Ologuro from Commodities Securities to weigh in further into Moody's report on the Nigerian banking sector. Hello, Bolaho. Thank you for joining us. Good morning.
Good morning. Thank you for having me.
Good morning. Great to have you. So the latest report from Moody's highlighted a number of risks to Nigerian banks.
Good morning. Thank you for having me.
Yeah, can you hear me? Bolaho. Okay, so my question is that the latest report from Moodys highlighted a number of risks to Nigerian banks. Can you unpack the key issues raised by the rating agency and what they mean as to you as an investment analyst?
Yeah, so thank you for having me. So the issues raised by Moodys are not materially different from our opinions about the banking sector in 2021. So the major issue highlighted is the fact that they expect asset quality risk to increase in 2021 on the back of withdrawal of some of those measures we saw from CBN last year to support banks and ensure financial system stability. So if you recall, in 2020, March to be precise, when the Nigerian economy was affected by the double whammy of downturn in the oil market and the pandemic. CBN stepped in with a number of measures, included a support facility to households and as well as SMEs at around 50 billion. CBN also reduced the rates on intervention facilities from 9% to 5%. It's also enabled banks to make use of a regulatory forbearance to restructure some of their exposures to stressed sectors in the economy. So all of these factors for us played a key role in the sort of stability we saw in NPL in 2020. So as at 9 months, we saw NPL around 6%. And if you compare that to what we had the last time the economy faced a similar crisis in 2016, and we saw NPL at double digits level. So certainly for us, we think that those measures from CBN ensure that the key metric used in assessing NPL formation in the banking sector did not sort of experience a significant increase. But looking ahead into this year, CBN, for one, they have already released a revised guideline stating that they have extended the interest rate on intervention facilities for another 1 year. However, for the rollover of moratorium, which was initially extended for a period of 1 year, but elapsed in February this year, CBN has stated clearly that that will be based on assessments on a case-by-case basis. In other words, it implies that for banks, they will be required to assess the performance of those loans in 2021, and based on the outcome of that assessment, they will then decide whether it should be classified from stage 1 to stage 2 or stage 2 to stage 3. So we are looking at a scenario whereby we're likely to see increased classification of loans to from stage 2 to stage 3, which is the NPL bucket. And in that case, you would expect NPL ratio to increase for the banking sector in 2021.
Now, how do you expect banks to navigate the headwinds on the horizon?
Yeah, so certainly, I think there are a number of risks to banks' earnings in 2021. Firstly, I think we are likely to see the CBN again stepping up with arbitrary CRR credits, which would pressure their liquidity positions. However, we still think that looking at the performance of banks that have released their earnings thus far in 2020, the likes of Zenith Bank, GT Bank, we observed a number of positives that we think these banks would still leverage on in 2021 in delivering decent earnings. So from the perspective of funding costs, we have observed that banks have been able to optimize their funding mix by sort of redirecting or improving the composition of retail deposits in the overall deposit mix. So that has supported a steep decline in their interest expense. And we think in 2021, banks would continue to step up their efforts in improving the composition of retail deposits in order to ensure that the overall impact of the low interest rate environment on net interest margins is relatively muted. So we think that despite the fact that the yield environment has also begun to sort of tick up, we think that is also a positive for interest income in 2021. So in the second half of the year, I think we expect slight improvement in interest income on the back of that recent retracement in yields in the fixed income market. Aside that, we think that banks have also stepped up their investment in technology in order to ensure that customers are able to carry out transactions from the comfort of their homes using their mobile phones. So we think that is also another area where banks would also look at leveraging on.
All right, looks like...
Well, I guess technology is not friendly, or rather, the internet is not friendly today. Right, but while we try to get back Bolaho to explain all of that and perhaps what the positive triggers would be for investors, let's quickly...
Even though it's a negative outlook.
Yeah, let's quickly take a look at this. That's a supplementary budget coming from the federal government as they are proposing to spend 396 billion naira for the COVID-19 vaccination in 2021 and 2022. Now, the Minister of Finance, Ms. Zainab Ahmed, explains that the figure may significantly reduce as the federal government receives more donations of the vaccines from the private sector. Mrs. Ahmed made this disclosure after the weekly Federal Executive Council meeting, which was presided over by Vice President Professor Yemi Shibajo.
Sometime in January, the President has, based on a request by the Ministry of Health, given an in-principle approval for the Ministry of Health to work with the Ministry of Finance, Budget and National Planning to prepare and take to the National Assembly a supplementary budget for COVID-19 vaccination. The submission that was made to Mr. President at that time was in the sum of 399 billion. But included in this 399 billion was a 103 billion for building of primary health care centers. So we've worked with and met several times with the ministry. We've agreed that we'll back out this building of primary health care centers that can wait till later. So there's still a provision of 396 billion for COVID-19 vaccinations for 2021 and 2022. So the ministry is working with partners that are donating these vaccinations. So we see the timelines of the donations and see the gap that the government needs to fill in 2021. But we have already provided to the ministry funds to enable them roll out the vaccines that have already, the 4 million that have been brought already into the country, and the vaccination process is ongoing. For the military hardware, we have met with the service chiefs and the Chief of Defense Staff. They are supposed to aggregate their request for review between themselves and then passing through to Mr. President, then it will be sent to us. So we're waiting for the information of their aggregate requirements.
Oh, that was Mrs. Zainab Ahmed, the Minister of Finance. We'll take a break now. When we come back, Commodities Market Update is next. Starting off this segment on the global oil market, as some prices rose this morning, recouping some of the previous session's losses on expectations that a meeting of OPEC and its allies later today would yield output constraints in the face of resurgent COVID-19 infections in some regions. Brent crude for June delivery was up by 31 cents at $63.05 a barrel after falling 2.2% overnight. U.S. oil was up 38 cents at $59.54 a barrel, having dropped 2.3% on Wednesday. Ministers from the Organization of the Petroleum Exporting Countries and Allies, including Russia and Kazakhstan, a group called OPEC+, are meeting later today to consider options that include an output rollover and a gradual output increase. A lowering of the OPEC Plus oil demand growth forecast for this year by 300,000 barrels per day also weighed on prices and made it more likely the meeting would result in continued restraints. On Wednesday, the Joint Technical Committee, which advises the group of oil-producing nations that includes Saudi Arabia and Russia, made no formal recommendation. OPEC Plus is currently curbing output by just over 7 million barrels per day to support prices and reduce oversupply. Saudi Arabia has added to those cuts with a further 1 million barrels per day. Okay, let's dwell more on this commodities and, of course, the domestic issues relating to commodities. And here we have Dumebi Yeke, one of the research analysts with Financial Derivatives Company. Hi, Dumebi.
Hi.
Good morning.
Good morning.
Good to see you again.
Good to see you.
Well, the meeting of the OPEC, of course, is today. But then prior to this meeting yesterday, we saw OPEC reversing its oil demand outlook. So what would you say triggered this revision, and what effect would that have on the market generally?
Generally, the OPEC is considering the renewed lockdowns in various regions, especially Europe. We heard of recently that France is having a 1-month, lockdown. Germany also renewed its lockdown. So there is pessimism on the global oil demand outlook and how that's going to affect prices in the near term. And the thing is, OPEC is being very cautious and very conservative in its decision as to whether to increase supply or maintain output cuts or even cut, all supply again. So generally, they are considering the renewed lockdowns, how that's going to affect global oil demand and in turn prices. And earlier in the year, we noted the fact that OPEC has, a very strong optimism about the fact that they want to keep oil prices, around $65 per barrel. So they're really keen on that particular decision. And basically, the cartel and its allies have shown that they will do whatever it takes to make sure that a repeat of what happened in Q2 2020 doesn't resurface when oil prices crashed to about $18 per barrel. So they don't want a repeat of that. So they're making sure that oil prices remain at this particular level and basically considering renewed lockdowns. And the general decision basically for OPEC could be that they could, sustain their current output cuts or even deepen cuts further.
Anyway, they're meeting today.
Yes.
So what do you think would be the outcome of the meeting?
I honestly think that they would either, one, retain their current output cuts or deepen.
Particularly with what we're seeing now,
exactly,
oil now trending up because of this
exactly.
output
And remember that OPEC actually contributes, or global oil supply, OPEC just makes about 39% of global oil supply, or global oil production. But at the end of the day, their take on whatever decision that they make, happens to have a very, very significant impact on the oil market. So if OPEC today decides to increase supply, we will see oil prices go lower at a very fast pace. If they also decide to maintain their output cuts or deepen output cuts, we could see oil prices go as high as $70 per barrel. Remember what happened earlier in the year when they had their meeting and they maintained all supply cuts, and oil prices was able to trend higher to about $70 per barrel. So whether or not whatever decision rather OPEC decides to make, even if they contribute about just 39% of global oil production, it would have a significant impact on the oil market. So definitely they are treading really cautiously to make sure that oil prices do not go below $65 per barrel.
Now, in all of this, whichever decision, they eventually come up with, how will that now impact Nigeria?
Nigeria is on the receiving end of this equation. In the OPEC cartel, which is an oligopoly, Nigeria is a price follower. So it just takes whatever it gets at this point. So if OPEC decides to deepen output cuts, we could see Nigeria having to reduce its oil production to meet whatever quota it is given. If it maintains output cuts, that's what they're going on currently, Nigeria is going to maintain its current level of production. And if it decides to increase supply, we could see Nigeria increase production in response to that decision. I remember that Nigeria is more production sensitive than price sensitive. So whatever happens to our oil production, whether or not we gain from oil prices, it will still tell on our oil revenue.
Okay, well, the global price of LNG, cocoa have declined year to date. How will this affect Nigeria's export revenue, say in the near term?
So LNG also contributes quite a lot to Nigeria's foreign exchange earnings. As at Q4 2020, LNG made up about 11%, about 11.6% of Nigeria's foreign exchange earnings. So yes, it does a lot for Nigeria. And the truth of the matter is that, Nigeria needs to do a lot more in that particular sector to boost its contribution to export earnings. And at the same time, for cocoa is one of our Nigeria's most traded agricultural products, including sesame seeds, cashew nuts, and all of that. So their global prices trending downwards doesn't do Nigeria a good deal. Why? Because it means a reduction in Nigeria's income in terms of exporting these commodities, because if their prices are lower in the global market, it just simply means Nigeria is not going to earn as much.
All right, and then we're seeing our external reserves continue to build up, and of course the Naira falls to about 486 per dollar. So what's driving this?
We've seen the reserves build up to about, as of this morning, on the CBN website, it was about $34.79 billion. And we've seen this accretion for the past week now, for about a week now. And what comes to mind is the relationship between the external reserves and forex rationing and the average daily turnover at the IEFX window. So what this means is that if the CBN is actually intervening a lot in the IEFX window, we will see a drawdown in the external reserves. We'll see external reserves decline. But now that we're not seeing that happen, it brings to mind the fact that maybe the CBN is actually continuing its forex rationing, and that's why we're not seeing the external reserves decline. And also, it could be that the backlog, because a lot of times when oil prices increase, for Nigeria, we don't see, there's a lag effect on external reserves. So meaning that the oil revenue that we gained probably in January, February is reflecting now in March in our external reserves. So that's what that lag does. So external reserves is probably going up because of, number one, the backlog of January and February increase in oil prices that's, adding up to our reserves now, and the fact that the CBN might be continuing its forex rationing and not increasing its intervention in the IEFX window. And that's probably why we saw the parallel market depreciate to about 486 naira per dollar, because once there is a decline in forex, once there's a dollar illiquidity, we see a lot of activities in the parallel market, and this is because the economy is resuming, businesses are opening, manufacturers want dollars, they need to import. So we would see activities in the parallel market and even the IFX window. Once there's a surge in demand and supply is not sufficient to meet that demand, we will see a depreciation of the naira.
All right, let's look at China now. The PMI for the month of March spiked to 51.9 points. What does this mean for Nigeria?
So let's start with the facts for China right now. China is the world's biggest importer of grains. China has an Iran deal. China and Iran, they have an oil deal right now. China also was the only economy that did not contract in 2020. China is one of the big, right now is almost,
even though the virus
trying to catch up
there.
Exactly, it's trying to catch up with the US as the biggest global economy. So China, and also China is Nigeria's leading import trading partner. So if anything happens with China, it has almost a direct effect on the Nigerian economy. Why? China imports a lot of things. We import a lot of things from China. So if the economy is booming, it simply means that we would have to, we'll continue buying a lot more from them, and it's good for us at the end of the day. Then we also look at the fact that if China's economy is booming, there is some respite for the global economy in terms of demand for grains, in terms of demand for copper, in terms of demand for several commodities. And that brings to mind the super cycle that we've been hearing talks about, because we could see a repeat of what happened in the early 2000s. That's number one. Number two, the PMI is a forward-looking indicator for several economies, meaning that if we see the PMI, the Purchasing Managers Index for any economy spike by that amount, it simply means that the GDP for that country could go by the same pace. So if China's PMI is increasing at this pace, we could see China's economy grow by as high as 9% in 2021.
All right, now let's look at the tables. Domestic commodity prices like rice, garri, tomatoes have climbed again. What's driving these price increases?
The first thing is the Easter period. During the festive period,
what are people buying?
But during the festive period, we always see price of commodities increase. Nonetheless, we're also seeing a repeat or a spillover of what happened in 2020 right now in the economy. So we're seeing the price of commodities increase both in festive periods and as a result of so many other structural bottlenecks, supply chain disruptions, especially insecurity in the food belt, which is really shortening Nigeria's food reserves. We've seen prices double just from last year based off of what we're seeing right now. So we're seeing the festive demand boost prices. That's number one. Number two, the already lingering issues and problems like the insecurity, forex restrictions on food imports, and all of that. We're seeing that feed into prices. And most importantly is also the exchange rate. A lot of times when you go to the market now for provisions, you almost even will see a man selling a yam will tell you that dollar has gone up, or even for yam,
Wow.
So all of that is quite funny, but I mean, everybody takes advantage. So once the dollar,
dollar has gone up.
Exactly. Once the dollar goes, so there's that exchange rate pass-through effect to food prices. So we're seeing all of that play, and that's why food prices are going up.
But with all these food prices going up, what's your outlook for inflation in the near term?
I mean, we're looking at inflation for March climbing as high as 17.8%, and for April, probably 18%.
All right. Looking at the stock prices, mixed performance on commodity-sensitive stocks on the Nigerian Stock Exchange. Flour mill going up, Dangote sugar down, Nestle down. What can you say about this?
The first thing is that with the improving interest rate environment, we're seeing stock prices dip. So, and of recent, we've seen a very mixed performance and volatile performance of the stock market, basically because of the inverse relationship between between interest rates and stock prices. For commodity stocks, we realized that a lot of times, most of these manufacturers, they try to shield themselves from exchange rate pressures, from interest rate pressures by buying in bulk. So a lot of times they would have stored up their raw materials, stored up a lot of things that they want to use for a particular period in time. So we haven't really seen so much change in their stock price, apart from the fact that, there is the general investor sentiments, the fact that investors are moving away from, equities market to the fixed income space based off of interest rates are coming up. So it's still a mixed performance. And basically, we just really think that a lot of manufacturers, a lot of players in this industry will try to continue to shield themselves from the exchange rate volatility, from policy uncertain environment and all of that. Just would want to do that a lot more to stay afloat and just continue making gains generally.
All right, thank you very much, Jumebi, for sharing your time with us today.
Thank you for having me.
Appreciate it. Okay, we'll take a moment. We'll be back. All right, is a new month, is a new quarter. Well, the market ended the first quarter negative. Well, let's just hope that the new quarter will be more positive. Eddie, you give us the details and what we should expect.
Good morning, Timmy. Well, for the markets yesterday, I mean, you and I are representing the color of the market. But the all-share index was down yesterday by 0.57%. That was the same percentage decline that we saw in the market in the previous trading session. But this time around, it was due to losses, especially on the banking sector. The all-share index was at 39,045.13 points, while the equity cap was at 20.428 trillion naira. And activity level was mostly negative yesterday. Volume, however, rose by about 3%. Value was at 2.80 billion naira at 3,990 deals. But to get a sense of what really happened in the market yesterday is Afolabi Benro, a trader at Stanbic IBTC Stockbrokers. Good morning, Afolabi. Thank you for joining us on the program.
Good morning, Eddie. Thank you for having me.
Could you please run us through what really happened in the markets yesterday?
So basically, we have seen that we're coming towards the end of the results season. So most companies have actually announced, their full year results with corporate actions and, bonuses and dividends. And investors have basically either banked or have positioned to bank, on these corporate actions. So the market is kind of lacking a catalyst right now. What investors are looking forward to now, the first quarter results, which are due the next 2 to 3 weeks thereabouts, to kind of see, how companies are faring, so far in 2021, and that would basically guide, how they're going to take decisions, for the rest of the year.
Are the negative sentiments still in the market this morning?
Yes, I mean, it's a bit quiet. Usually the market starts out a bit quiet and then things start to pick up a bit later. But so far this morning, it's actually been a bit flat. Nothing major has happened yet. But we still expect to see And based on what I said before, that there will be some bearish sentiments in the market still.
All right, Afolabi, thank you for your input on the program.
Thank you.
Afolabi Benro is a stockbroker at Stanbic IBTC Stockbrokers. I will just go over the market numbers. The sectoral performance was mostly positive, apart from the banking sector, which declined 0.84%. We saw losses on Access Bank, on Zenith Bank, on GT Bank, on UBA, and that dragged the market yesterday. Consumer goods was up 0.39%. Industrial goods was down 0.03%, and we saw some declines on WAPCO yesterday. Insurance was up 2.22%, while oil and gas gained 0.02%. The unlisted securities market was positive yesterday as the NSI rose by almost 1% at 747.01 points, while the market cap was at 530.08 billion naira. We saw about 50,000 units worth 5.50 million naira traded in 3 deals. Now, the bond market was a bit quiet yesterday, although we saw yields rise in that space marginally, though. There were 7 deals worth 7.40 billion naira. Now, the market, just remained on the sidelines as we're waiting for the primary market auction to see how that would shape sentiment in that space. The Nigerian Treasury bills market was also a bit quiet yesterday. There was an auction yesterday, so all eyes were on that. But we saw some huge value or huge deals on the bills traded yesterday. We could see the September 2021 with about 25 billion naira. There were 23 deals in that segment. But to talk more about the primary market auction is Keye Ewebi, a fixed income dealer at FSDH Merchant Bank. Good morning, Keye. Thank you for joining us on the program.
Good morning, Lillian.
So could you just tell us about the turnout at the primary market auction yesterday and how that will shape trading today?
Yesterday, the DMO sold 144 billion at the primary market auction, and this was 49 billion more than the amount offered. The auction was highly oversubscribed with overwhelming demand for the 1-year paper. Stock rate for the Nigerian and 3.5% respectively, while the 364-day paper gained 100 basis points to close at 8%. We expect a slight bullish trend on the NTD papers today as market participants try to fill the unmet demand at the auction. Going into next week, we expect market to trade cautiously due to the reduced system liquidity. There will be NTD auction settlement today as well as funding for retail FX option. So liquidity levels will drop, and we expect markets to trade cautiously across board.
Thank you for your input on the program, and have a lovely holiday ahead. Keye Ewebi is a fixed income dealer at FSDH Merchant Bank. Well, we'll just keep our eyes on the market. It's a long holiday, so we'll wonder how investors are going to, resume from this holiday. Hopefully, they come back with positive sentiment. If we're expecting earnings in the market from this quarter, we haven't seen all the earnings yet from full year, so what's really going to happen? I guess we'll just have to wait and see, Chile.
Yes, of course, we have to wait and see, but I suspect the market will still be quiet, at least for today. But let's hope what happens when the market comes back after the Easter break. Okay, we'll take a quick break, and when we come back, we'll do our opening call to London.
And for updates from London, let's talk to Juliana now. Hello, Juliana. Great to have you. Well, after an unprecedented... Good morning. After an unprecedented year of disruption, UK fashion homeware retailer Next has seen its profits halve, but it's also boosting its earnings forecast for the year. What's driving this optimistic forecast?
Well, investors are pretty happy with Next's recent trading report. That's why they're one of the biggest fallers on the FTSE 100 this morning. Their shares were up by about 3.4%. And there are no surprises, really, that they've seen a slump in 2020 because throughout most of last year, non-essential retail was closed. They were closed alongside that. But I think the headline that's cheering shareholders is really that online sales are boosting their overall performance. They've shown that over the past 12 months, they've added added a further 40% to their online customer base. They're also expanding that base. So not only do they have the older crowd, but they're also getting a lot of attention by the younger population, which is very good because usually they like shopping on the likes of boohoo.com. So they have shown strong performance, especially in the first 2 months of the year. They said their sales are up 60% online compared to where they were 2 years ago. And of course, we're all counting down to 11 days now when non-essential retail is open, and they'll hope to remain supreme king again.
When people can spend again. Well, PMI data is on the watch today. Any details about that?
Yeah, we just got it in a couple of minutes before I got into the studio. Really, really strong performance from manufacturing. Clearly, it is leading the growth in the British economy. It came in at 58.9. This is the biggest PMI reading that manufacturing has had in over a decade. So that shows just how huge it is. This is for the month of March. In February, it was 55.1, much bigger than what economists had forecast at 57.9. A lot of people are saying these are because of huge orders. Factories have been extremely busy because finally we got that roadmap from the Prime Minister detailing when we were going to be getting out of the lockdown. If you couple that with the strong vaccination drive, orders have been flying high. So this is very, very good. There is a little bit of cautious optimism. Of course, manufacturing, we look to the manufacturing king, China. So hopefully, if their growth doesn't wane, then these numbers, show that there will be accelerated growth in the British economy over the next few months.
Interesting. Well, meal delivery chain Deliveroo is reeling from its dire debut on the London stock market yesterday. Are you tracking the share price today?
Yeah, everyone's tracking it. It's a big story. Unfortunately, Deliveroo still has the name Flopperoo after yesterday's pretty dire, embarrassing performance. Shares slumped by about 30% this morning. Shares are still down about 1.9%. And even though we've spoken over the past couple of weeks about the massive hedge funders that turned their back on Deliveroo, so many didn't. And now, of course, they are feeling the loss of the amount of money they've invested. £2 billion was wiped off its market cap in the first couple of minutes. And as we're seeing from the day after, there doesn't appear to be any rebound. So even as the FTSE goes into a pretty long Easter weekend on a high, Deliveroo is certainly on a low.
Flipperoo, quite a mean name, I must say. Anyway, Juliana, thank you so much. Do enjoy the rest of your day.
Thank you.
All right, let's check out what's happening in the crypto market. I hear 1 Bitcoin can buy a house in Nigeria and some parts of Nigeria right now. What's happening in the market?
Laddie, you can do me a whole lot of good by giving me just half a Bitcoin.
I wish I had myself.
And that would be great. That would be just awesome. All right, good morning and welcome to the Cryptocurrency Corner. Well, we start with the market cap, which was down 2.63%. At $1.83 trillion, but that did not disturb the Bitcoin dominance. It went up by 0.31%, and it's now 60.25%. That's up. That's a good one. May not be a very good news for the altcoins, but we have Olumide Additional. Olumide Additional is an investment and financial market analyst. He's going to tell us, with this increase in the dominance of Bitcoin, is there hope for the alts? Good morning, Olumide.
Yeah, good morning. Thanks for having me this morning.
Thank you for joining us. Well, Bitcoin dominance has gone up 0.97, almost 1% at over 60% now. Is the altcoins, are they still a good investments at this time?
Yeah, I think now investors will be looking at undervalued crypto assets. Just like you mentioned, the first quarter Bitcoin has brought a return of over 100%. And I think at this point, the market is consolidating because don't forget that the price Bitcoin is trading at is close to its record high. So I think the next quarter will be a bit tough one for crypto assets, though history has often shown that Bitcoin performed better in the month of April and May. But I think the narrative is changing now. So I'm looking at undervalued altcoins that have good fundamentals. And my favorite has always been of late Chiliz. And the reason is because Chile is the crypto for sports. You don't forget that sport is a multi-billion-dollar business, and the fact that COVID-19 has erupted that business to record level has made the business look for other source of revenue. And crypto has been one no-brainer that brought a lot of gains. I'll give you an example. If you look at the Baccarat fan token that is often used to give fans giveaway, buy merchandise and stuff like that, has over returns of more than 2,000%. The stock was trading, the token was trading at $2 at its opening price, and now at the time I'm talking to you, is only about $41. That just tells you the fact that there are a lot of opportunities now in the ecosystem. It's not just about price speculation. People are now moving to utility tokens that can enhance productivity, leverage, and bring value to the ecosystem. So I think there's still some that will still show, and we're in an era of a lot of ICOs. ICOs are a coin offering where new crypto projects are coming out. So we are seeing some decent cryptos that are having good fundamentals. So I stick with Chilis, and also I'm looking at OMG Network that is also.
So are those the alts that you are bullish on? It's the beginning of the month. It's a good time to start an investment. Are those the alts that you are bullish on this month?
I think necessary. And, don't forget XRP too. Reports is revealing that XRP is going to settle with the SEC about $100 million. And that's a token that shows some upside. So I think around those tokens, I'm bullish on those tokens in the long term. But you see, price volatility often sometimes distorts this trend. So I think investors need to be aware of the risk when you're holding assets in the short term.
Okay. All right.
Thank you so much.
Oh, thank you so much, Olumide. Thank you for sharing your thoughts with us. Well, Olumide Additional is an investment and financial market analyst, and he just shared his thoughts with us. Well, just before I go back to Chimi and Ladi, let's say a little bit of price of Bitcoin, as at the time, it's very volatile. It's $58,000 over 58,000, almost 56, almost 59, I beg your pardon. Then 24 hours volume, $69.039 billion. The price of Ethereum is also doing well. Let's just focus on just Bitcoin, Ethereum is also doing well. Ladi and Chimi, let's not give all the glory to Bitcoin only,
Well, our eyes are focused on the altcoins. Even though Bitcoin dominance is going up, you've always said that whenever the Bitcoin is going up, then the altcoins might suffer. Exactly. But I guess the Bitcoins should be left for institutional investors.
While and then the altcoin for you and I, Chimi.
Anyway, absolutely. Some analysts believe that April is usually a bullish month for the overall crypto market. So we'll see how that goes.
Olumide talked about SRP. For you, what coin should we look at?
Well, XRP is actually one to watch, but at the same time, we need to get that judgment. So if it's a risk you're willing to take, why not?
I go for ZRX. I go for ZRX, but that's not a financial advice.
Yes, it's not.
All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.